Hello and welcome to the first video that I'm going to make for the Accounting 201 class. This is for the homework assignments that you have to submit on Connect. We will work on the assignments over here from our textbook. Remember, when you work on your assignments in Connect, you're going to get different numbers. So you cannot just copy the numbers that I'm going to go through over here. So with that, let's start with the assignment that you're going to be seeing and how we're going to work on that. So it's problem 1-5A. We have Cornhusker's company that provides the following information at the end of 2021. Before we read through all this, let's look at what we've been asked to do. We've been told that we are required to prepare an income statement, statement of stockholders' equity, and the balance sheet for Cornhusker Company on December 31st, 2021. No common stock is issued during the year. Now, what I want you to pay close attention to over here is that these are the three basic financial statements that we're going to be preparing. These are very, very basic in terms of what you're going to see right now. As you go through the semester, each of these statements are going to become a little more complicated because you're going to have more information that you're going to present. So as with any financial document, you absolutely have to have the header for the document. Let's take a look at what the header is for each of these documents and what goes into the document before actually going through the numbers that we have and the account names for this particular year. So to start with, for every company, you have to identify the name of the document first with the name of the company. So for all three statements, I have the name of the company written out. The next line, you identify what statement it is. So we're going to prepare three different statements: the income statement, statement of owner's equity, and the balance sheet. Now, each of these, they're going to be laid out a little differently, and we have to see what period it pertains to. So the income statement is basically saying for a period of time. So in this case, it's for the year ended December 31st, 2021. Which means all of this information pertains to activities that started on January 1st and ended on December 31st. It's basically giving you all the activities for this period, 12-month period. Same with the statement of stockholders' equity. It is always for the year ended, for the month ended, for the quarter ended. In this case, it's year, which means it's giving you a 12-month period, the activities. The balance sheet, as the name suggests, balances as of a particular date. So this is as of December 31st. So this is on this date what the number is. So it's not talking about a period in time. It's the cumulative total at this particular point of time, what my account balances are. So if you recap what we've gone through in chapter 1, the income statement is basically your revenues minus your expenses. You list all your expenses. The difference between those two will give you your net income. So I'll list all my revenues. I'll list all my expenses. The difference between those two is my net income. For the statement of stockholders' equity, we have three major accounts that we are going to be looking at, but what we're interested in is common stock and retained earnings. These two put together are the stockholders' equity account. Now, in the balance sheet, we have all our assets, all our liabilities, and all our stockholders' equity accounts. So this is a skeletal form of every income statement, statement of stockholders' equity, and balance sheet. So for those of you who are very, very new to accounting, try and memorize this if you need to. We have three statements: the income statement, statement of stockholders' equity, and the balance sheet. The income statement and the the statement of stockholders' equity are for a period in time. So it's talking about for a length of time. So in this case, it's for the year, which means it's a 12-month period. Balance sheet is as of a particular date. So we're looking at December 31st, 2021. What goes into the balance sheet? All assets, all liabilities, and all stockholders' equity accounts. Stockholders' equity account, you're looking at only two of them: common stock and retained earnings. We're just looking at these two. Okay. Now, income statement, it's revenues minus expenses will give you net income. So what do we do with this statement of stockholders' equity? So common stock and your retained earnings, if it is a brand new company, as in I started the business on January 1st, 2021, these two, the beginning balances will be zero. Otherwise, a balance carries over into the next period, and we'll see how to deal with that. During the year, I may issue additional common stock, which means the investors may give more money to the business to run the business, probably for expansions, etc. They may give more money. There may or may not be an issuance of common stock, new common stock issue. What we will always have is net income. That's a number that you come up with over here will be added here. And then a part of the money that's retained in the business will be given out as dividends or may be given out as dividends. Dividends is basically a share in the profits. And then finally, you'll have your ending balance. So once again, three statements: income statement, statement of stockholders' equity, both of which are for a period in time. Balance sheet is as of a particular date. Balance sheet has three groups of accounts: assets, liabilities, and owner's equity. Owner's equity always has just two accounts. There's common stock and retained earnings. That's when you're looking at the very basic format. Common stock and retained earnings. You have in the statement beginning balance, add any additional common stock issued. Add net income. We are assuming it's a profit, so you're adding. If it's a loss, you'll subtract. Subtract dividends paid out. That is, if any dividends were issued by the company, and that gives you the ending balance. Those ending balances are the numbers you're going to bring over here. So let's start reading the problem and see how we're going to deal with this. One of two ways in which you can do this. As you read the accounts over here, identify which statement it goes to, and you can put it directly. Or you can write down each of these, what they are, and then you can find all the revenues, all the expense, and you can list them there. So I'm just going to first read through the account names and try and identify what they are. Cash that's remaining at the end of the year, cash is an asset. So cash, I'm going to list that over here, and I'm going to put that number over here, 4,800. So I'm going to go ahead and as I see an account name, I'll tell you what it is, which statement it goes to, and put it in over there. The next is rent expense for the year. So my business, wherever I was running my business, I had to pay rent. It's a cost of doing business. And I'm going to list that over here, rent expense. And I'm going to put this 7,000 over here. Now I have two columns over here. These are just an inside column and an outside column. That's all it is. In the inside column, I list all the details. In the outside column, I'm going to put the totals. Okay, the third item listed over here, account listed, is land that we have purchased, 21,000. Land is an asset. I'm leaving one line and then I'm going to write land, and I'll tell you later on why I'm doing that. So land is 21,000. Then I have retained earnings, $12,400. This is at the end of the year. This is retained earnings, ending balance has been given to me. So the retained earnings ending balance is 12,400. Utilities expense, I paid my BG&E bill and all those wonderful things that you need. Cost of doing business again, utilities expense. I'm going to add that number over here. I'm going to list it over here, 4,900. Accounts receivable from customers. So I perform some services. I sent a bill to my customer. They will pay me in the future. So right now, it's an asset in my books, and I'm going to list it as under the assets in the balance sheet. A key over here, if you're not sure, is it an asset or a liability? Look for some word that kind of gives you the hint. The word receivable. Always, all the accounting is done from the viewpoint of the company. So for Cornhusker, they will receive 7,200 from their customers, therefore it's an asset. The next one is service revenues, 37,000. And you'll see over here, I'm putting this number in the outside column because there's only one service revenue. I don't need to list it inside. Now, if I had multiple sources of revenue, I have my main service revenue. Let's say, for instance, I'm subleasing a part of my office and I get rent revenue. I have money in the bank that's earning me interest, that's interest revenue. In that case, I'll list all the revenues in the inside column and put total revenues in the outside column. And this example, there's only one item, so I'm just putting that in the outside column. Then I have my salaries expense. So I'll list my salaries expense over here, and that's going to be $13,300. Accounts payable to suppliers. Cornhusker has to pay their suppliers. They have a legal obligation. They bought something, let's say from Staples. Staples has sent the bill, they now owe that money. So that's a liability. So accounts payable, they owe the money, it's a liability, $2,200. Dividends paid to shareholders during the year. They paid out dividends. Dividends are always paid from retained earnings. It's paid out, so I'm putting it in parentheses to indicate it has to be subtracted. I wrote the word less over here, but I'm going to go and put this number in parentheses to indicate it should be subtracted. Common stock that was issued prior to 2021. So this is not common stock that was issued during the year. This was already issued in the past, which means this is my beginning balance. Salaries owed at the end of the year. If they had just said salaries, it would be salaries expense, but they're saying salaries owed. This means the employees have worked for me. They have already worked for Cornhusker. Cornhusker has not yet paid them. They will have to pay them in the future. That makes it a liability. Salaries payable. So although they didn't use the word salaries payable, as they had done earlier, for the other payable, they have not done that over here. So I'm going to write that over here as a liability, 2,400. Insurance expense for the year, go ahead and put this under expenses, and that is 3,500. And then they're telling me retained earnings at the beginning of the year was 7,300. So if you recall, then when we saw retained earnings over here, I told you it was end of the year because nothing was mentioned otherwise. If you are not sure of that, look to see if there was a retained earnings beginning balance. Typically in a problem, they will tell you whether it's beginning balance or ending balance, or they'll at least give you the date. And that should be a hint for you as to whether it's a beginning balance or ending balance. Okay, so I've gone ahead and put all my numbers where I think they belong. Okay, so now let's finish up these statements. You always have to go in order. I have to finish my income statement first. So I have total expenses. Now I'm going to add up these numbers and put it in the outside column. So I have my revenues minus my expenses. That gives me net income of $8,300. Total revenues minus total expenses. If you had put all these numbers in the outside column and done the total, nothing wrong with it. This is just a presentation style. So visually, especially when I'm trying to explain this to my students, I want you to be very sure that these are all the numbers that are added up. So I put those in the inside column. Again, there was only one service revenue item, so I put that in the outside column over here. Now this number, this is really important. We keep this in mind. This net income number, that needs to come in over here. So these statements are connected. Now, the net income, these are the earnings of the business. They belong to the stockholders, which is why it comes into the statement of stockholders' equity. So I bring that number down over here. So the number from here comes into this statement over here. Okay. Now, my stockholders' equity beginning balance was, again, remember, it's common stock plus retained earnings. So you add these two numbers. My beginning balance was 23,300. I did not issue any common stock. If I had issued some common stock, that number would have been listed over here. Okay, so I don't have that over here. I'm just putting that a zero over there to indicate nothing was issued during the current year. And I can go ahead and put a zero over here. Net income, the total is obviously 8,300. Dividends is 3,200 that was paid out. Common stock, now I'm doing the total vertically. Common stock, my total is 16,000. Retained earnings is 12,400. Now, whether you add it across or you go down, you should come up with the same number. It can't be any different. Okay. So my common stock plus my retained earnings. Now these numbers, I'm going to put in a different color so we can see what we are looking at over here. These numbers, the common stock and the retained earnings numbers. Okay, so let me actually just highlight these two numbers and these two account names so that we can put that in perspective over here, what we're looking at. We have common stock and retained earnings that we bring from this statement into the balance sheet. Now that I have that done, let me finish up my balance sheet. Assets, I add them all up. Total assets, when I add up these three numbers, I come up with 33,000. Add up your liabilities. Your total liabilities is 4,600. Add up your common stock, the stockholders' equity accounts at the common stock and retained earnings. That gives you total stockholders' equity. Now, what's the balance sheet equation? Assets equals liabilities plus owner's equity. So let's do the last part over here. Our total liabilities and stockholders' equity is 33,000. That's this 4,600 plus 28,400 gives you 33,000. So our accounting equation is in balance. That is total assets equals total liabilities plus owner's equity. So this is basically going over chapter 1, where we have looked at the three financial statements in its very, very basic form. Once again, remember, income statement and statement of stockholders' equity are for a period in time. In this case, it's for 1 year. Balance sheet is always as of a particular date. The balance sheet, you have three accounts, three account categories. I'm going to put that in, highlight those, the colors over here for you so that you can see that. Assets, liabilities, and owner's equity. Total assets must be equal to total liabilities and stockholders' equity. Otherwise, we made a mistake somewhere. Income statement has revenues minus expenses, revenues minus expenses. Let me highlight this one over here. Will give you your net income number. This net income number is going to come into the statement of stockholders' equity. Statement of stockholders' equity is basically explaining the changes in common stock and retained earnings. Those two accounts, those are the two accounts that comprise stockholders' equity, common stock and retained earnings. So what could change? Common stock would change when I issue additional common stock. Retained earnings changes when the company earns net income, which comes from the income statement, and when they pay out dividends. When they pay out dividends, it's going to decrease retained earnings. So your three financial statements are interrelated. You have to prepare them in a particular order. How you choose to work through this, it's up to you. But make sure when you're working on this, everything that's listed over here typically has to go into one of these financial statements. It's going to be extremely rare. It's typically in your intermediate and advanced accounting classes that you may have some information given over here that doesn't end up in any of these financial statements. For now, I would say anything that's over here has to go into one of these three financial statements. One last thing, in what order should I list these items? Again, it's a preference. In terms of expenses, companies in most cases will list it in the order of magnitude. That is, the largest expense will be listed first, and then it goes down the list. Not necessary. Some companies may choose to list them alphabetically. Here, just list them in the order in which you see them. That would be true for your service revenues as well. For your assets, you have to list them in the order of liquidity. Order of liquidity, which means the most liquid asset first and the least liquid asset last, which is why I put land over here at the third. Cash is already in the most liquid form. It means that's readily acceptable for any transaction, to settle any transaction. Then you go down the list. So in future chapters, you will see a little more about how you identify how you group, how you classify assets, liabilities, etc. So for now, you just keep this in mind. Assets have to be listed in the order of liquidity. Everything else, it could be a matter of your preference. Stockholders' equity always has just two accounts, common stock and retained earnings. So hopefully this kind of sums up chapter 1 for you, and you can work on your assignment now. Keep in mind, the numbers are going to be different for you. So make sure you read through your numbers very carefully.